Hey traders, I'm back again with another video, and bear with me today because these allergies are tearing me up today. So we'll see what happens if I can survive through a video. So about to get with it so we can get done here. I'm gonna start off with the US dollar yen. This is a pair that I'm in. I entered a trade here and I used the daily time frame. I posted this on my video on my blog, and I had a video on YouTube about this, and now I'm showing you that I actually did enter the trade. I don't know if I showed the trade while I was in it before, but you see here on the 4 hour time, on the daily time frame here, we're looking at this as price moved up, came down, and got back into equilibrium, hit our equilibrium point, which is the Kijun-sen. So the market was dead on equilibrium, and it showed that as price got pushed up, pushed back down right to equilibrium. Then price went down, got pushed right back up to equilibrium. Now the thing that I looked at, I saw this doji. This doji was pushed down, but prior to that you saw the move up. So the thing about this move up let me know that buyers were entering this market. This was a bearish market, as you can see price moving down. Now overall, if we use our Kijun-sen to rate the market, this would have been still a bullish market. The sentiment was bullish, and you know, short term it was bearish because you had this long, big, strong bearish candle, and you could see the move down. But this allowed me to know that buyers were coming into the market with price being pushed up like this. This showed me that buyers were willing to come into the market, even though the bears did push it down, and the bears pushed it all the way back down here. But again, this showed me that buyers were coming into the market still because they pushed it all the way back up here, and then they took over the market, and you could see price starting to go up. Now I've been sitting steady for a few days. You know, this is the daily time frame. I entered off of this candle, closed above this doji here. It was a bullish engulfing. It's a small one. It engulfed this little candle here. So I entered the market and I got my stop loss below the fractal level here. So actually the fractal level wasn't developed till this candle closed, because you need two candles on each side with higher lows on to be a bearish fractal. This is a bearish fractal. I want to have my stop loss below that. A bearish fractal will be if the market comes back and closes below that fractal. So the market will show us that it may want to go lower. So you go with what the market's been doing. We've been breaking these higher fractals. We haven't broken the lower fractals. So I can put my stop loss there, and I can know that the market is going to move higher. Well, wants to move higher based off of the formation of the fractals. Because here you have fractals down, up, down, up, down. You're breaking these lower fractals, and the market's going lower. It stopped breaking lower fractals here. Okay, and now we start making higher fractals. We have really not broken higher fractals except this little fractal formation here. And you can see the overall pattern here, how the market was in this descending triangle pattern. And I wrote something about this and said about it, I thought this was going to go shorter. So I thought this was going to break out and go short, but actually that didn't happen, and it broke out and went higher. That's when I looked at this and said, wow, let's see what happens here. And when it got back to our equilibrium point and showed me that this could be a strong support level, now we could see what's happening with the market. So I'm in this on right now. Now on the 4 hour time frame, this looks like a good trading opportunity presently. And looking at the 4 hour time frame, here's where I would have gotten into the market. This is the daily time frame. Here's where I got into the market. On the 4 hour, that was very bearish, so I wouldn't have been able to get on the 4 hour trade there. So looking at the 4 hour now, what we have here, we have your TK crossover is bullish, so you got that. Price is above the clouds, you're bullish. Then you got a future that is bullish, so your Kumo twist is bullish. And then Chico spanner is above price, which is bullish. It's inside the cloud, which is dangerous because the top of the cloud could be resistance for us. So we want to get outside of that cloud, and that will be very good. But the thing about it right now, we have a trading opportunity that just closed out because we're like 5 minutes into this candle here, and this is the level that you wanted to get into the trade. The break of this candle here, because you had a bullish engulfing candle, so you take the trade right there. Now this trade is still viable because we're above this Tenkan-sen here. All signals are bullish for a long trade, so we look for our next target, and we could put our stop loss a few places. One place is below this flat top here, and it's a nice level because you got the fractal there. So the fractal levels, we're not going to break. If we don't break fractals lower, the market has to go higher. We're not breaking them lower, so we'll break higher. We haven't broken this higher fractal yet, but we also haven't broken a lower fractal, so this is where you can put your stop loss. Or it's also right near the Kijun-sen, so you put it there, and you can put it below the cloud. So as you know, Ichimoku has a few stop loss levels, and I've gone through that before, so we're not going to get into that right now. But those are the stop loss levels that you could put your stop loss. So this entry right now is very valid. It'd be a nice opportunity, and you don't have a big stop loss either. If you put it at this level, you get in here, you got a stop loss of like 22 pips basically. You can move it down here and be even 40 pips, which isn't that bad. So this is a good opportunity with low risk right here. So you guys will probably miss this by the time I post the video, so sorry about that. But that's what I look at, and that would have been where I would have gotten into this trade, but I'm already in the trade, so I don't have to worry about that. So let's move on out of here and go to the next pair, which will be the Euro Yen. And this is a Euro Yen, so it's the 4-hour time frame, and this is the perfect example of why you need to listen to your signals, okay, to your rules. Follow your rules. See, we had a breakout right here, but the trade was not ready because we had a dark future. Now some traders take this, but our future was still dark. So let's see, 26 periods, we were only right here, so we were way far from being ready. Not way far, but we just weren't ready. And when you're not ready, you can see what happened. Price is in this consolidation phase, so price is doing absolutely nothing for you right now. So if you took the trade, you're hanging on there just hoping that it works out for you. So price is boxed in right now. So this is what I'll be looking for on this anyway. I look for, you know, breakout traders trade the breakout. So you trade the breakout of the fractal because you want to go boom, boom, boom. So you see your fractal here, another fractal here. So here's your low fractal. Now here's your high fractal. Broke this higher fractal barely, but the lower fractals are becoming higher. So you have higher highs, you have higher lows, which is higher low fractals and higher low swing points. Almost the same thing, but only fractals can make, you can develop fractals at consolidation phases and ranges. Okay, but these swing points are usually in a trend here. So now you're making higher low fractals, so you're making higher bear fractals and you're making higher bull fractals. So when you do that, you know the market's trending upwards, and if it continues to do that, you will see price break the next high bear bull fractal. So we don't expect it to break that bear fractal. Now sometime it does come back and break that bear fractal barely. Now here you broke a bear fractal. This bear fractal, you know, you didn't really develop well. This is the main one here, so you're almost like a Elliott wave pattern. You have a three wave and then this pattern. All right, but we're not going to get deep into no Elliott wave and stuff because I don't study the Elliott wave, and I don't need anything more to make trading harder or more things for me to look at, you know, than I already have. I look at enough things, and to look at more things, I think people put more and more things into their heart and to their mind and to their charts, and then they have to study more things, and then they have more things to tell them not to take a trade or to take a trade, and it just becomes confusing. So I stick with what I'm doing. All right, so the breakout entry is here above this level here, and your stop loss below this fractal, and that wouldn't be a bad breakout level because you have a stop loss of about 40 pips. All right, so that wouldn't be too bad. And then our targets, you know, we look for support and resistance levels. So one target that I would be looking for is around this level up here. Okay, so 44, oh sorry about that, if we do 40 and we're about 60, so we're not quite getting 2 to 1. And then if we even move it up here, because let's see exactly where that level is. Yeah, this is the good level here because you could see we're bouncing here and then we come down and we bounce on the bottom. So this is a good support and resistance level, and then right here you can see it was support. So it was support here, resistance, support, now resistance, and it should become resistance again eventually when price moves up to that level, and that's the level that we'll look for the target. So that is definitely going to be about 75, close to 2 to 1. So you're risking one and making two of what you're risking. So that'll be better. Uh, that's a pretty good trade. And then when you're looking at this, like I said, this wasn't ready because 26 periods into the future, you were still had a dark future. You want to have a bright future with a TK with a Kumo twist that's bullish. Here it turned bullish. That's about 28 periods after that candle. So let's see exactly. That's around 20. Actually, it's even more than that. It's 30, 32 at least before it even happened. So that's a little too far off. So with that being said, here's what's happening. The market's in a range. It's consolidating. And now Chico span is above price. You still got have this stuff here, which is dangerous. The bottom of this flat cloud is very dangerous. It's going to be a strong support level, a strong resistance level, sorry. And you can see that's a shadow basically, which stops the market here. And boom, the market stops. It needs to break this level, and then you have this strong support level here. So we're between levels here. You're between this level and between this level. We need price to break out one of these ways, and the breakout level will be here. And then you have your, like I said, this is going to be your stop loss level. Now once we get through come through the cloud and break below, then we know we're all wrong. But all of our signals are bullish because we have a TK crossover here, bullish. We have a Kumo twist, bullish. Now Chico spans above price, bullish, but we need to watch out for this cloud, and price is above the cloud, the main thing, which is bullish. So we're looking for a long trade here. Look for something to bounce off of this level here, or get into the breakout trade if you like breakout trade. Boom, that's the level right there, and there you go, your trade is good. So that's the euro yen. That's the euro yen on the 4-hour time frame. All right, so we're going to look at New Zealand dollar, US dollar next. Okay, so New Zealand dollar, US dollar, 4-hour time frame we're looking at here, and you can see price was in a downtrend moving downwards. Then we had this bottom out here, so we need to look at what the fractal levels are, what's happening with the fractal levels. So we were breaking bear fractals here, continued breaking bear fractals, and we broke a bear fractal here. Then here's a bull fractal, and here's the bull fractal that we're concerned with. We broke this bull fractal, we broke this bull fractal level. We haven't broken this bear fractal level, and it looks like now we're making bull fractals higher and bear fractals higher. So basically maybe the trend has stopped and we have a change of direction for now. Maybe it's a pullback, but we'll see. But the trading opportunity still is going to be available here. And I know we already have a TK crossover that's going to be bullish, but our future isn't bullish yet. So let's add these things so you guys could see. You guys could see this. I already know this. See, we already have a crossover that's bullish. And we'll put Chico span. We could see Chico span will be right here. So it's basically getting above that level. It broke above the closes. So that's the thing. We're not above the fractal level yet. We broke that level, but we pulled back. So this is a pullback here. So we may develop a fractal level somewhere in this area. So now we want to try to get a bounce off of one of these levels, off of this support level here for the top of the cloud, or maybe back to the Kijun-sen. That'll be a 50% retracement of this previous level here. So we'll put that move in. We'll show the retracement level. This will be a 50% retracement level. And sure enough, that's a 50% retracement level right there. You could see that level. Price will move back somewhere in here, 38.2, 50%. Those are the two main levels that I look at. So 38.2 will bring us around to this, around to the top of this cloud, somewhere around there, bottom of the cloud. 50% will get us down to the Kijun-sen here, and 61.8 will get us down here, which will then we'll have to wait for price to move back up. So Fibonacci retracement, folks may get into this a little earlier, but we're going to make sure we get into a higher probability trade. So we want to break on the side of that cloud, and we'll have all of our signals will be bullish by that time. Right now you still have a dark future, so if price continues moving down and breaks below this level, then all bets are off, because your future's still dark. Even though you have this TK crossover here, it's a weak crossover because it happened down here in bullish and bearish territory. You don't want a bullish signal happening in bearish territory, so that makes that a weak signal, even though it is a valid signal. And then Chiku span is above price, but you're still within these fractal levels, so you want to get outside of there, and you have the resistance of the cloud, which is very strong. This is a thick cloud here too, and look where Chiku span, where would Chiku span be? Somewhere 26 candles back. So let's see where it is, how thick it has to fight to get through the, it's right here right now. So Chico span is right here, and to get through this level here, not super bad. It's not like we're getting through this thick cloud here. Now you could see this was a whole bunch of volatility here, less volatility here, and basically I'm just, this pair is waiting pair. And again, another breakout, and this one didn't work out for you again because you have to wait on your future to be bright. If you got a dark future and you're trying to go long, you're not gonna, it's not gonna be what you want right away, because a lot of times it retraces and consolidates or ranges, and that's what this may do for a while before it breaks out. You need to get this crossover here, you need to get this Kumo twist, get your future bright. You have everything else is bullish on the 4 hour time frame. So we're looking good on the 4 hour time frame. We just need to wait for the proper setup, and we look for some kind of price action to get into that trade. So that's looking at New Zealand dollar, US dollar. We'll come back and look at the Euro Aussie in just a second here. All right, Euro Aussie, I'm like a broken record. I'm just repeating myself, saying the same things over and over. But you see this, you had a breakout here, Kumo breakout, and again it wasn't valid because your future was still bright and you had a bearish breakout. So now you can see what price is doing. It's doing nothing. It's basically looking like it's in a consolidated phase. It may stay in that phase until you get this future to change over into bearish. All right, so you do have all bearish signals though, because you have your TK crossover, which is bearish. Price is below the cloud, mainly thing, which is bearish. Chiku span is below price. It's inside the cloud. We need to get outside of that cloud. And then you have your future, which is still bullish. We need to wait on that to become bearish. Okay, now some traders do take this with a conservative stop loss, maybe tighten up your stop loss and be a little tighter. Now taking this one, you would have put your stop loss above the fractal level, so you're not that far from the fractal level. And my thing is, I have to take trades based off of all of my rules being the way that they're supposed to be. So I need all my rules to fall in line. A lot of traders take this trade and don't listen to the future and just worry about the breakout of the cloud and Chiku span and your crossover here. But I like to see that future, because that's one of your rules. So why take away a rule, right? So if I don't get the breakout, I wait for a different type of trade with all the rules, which puts this in a higher probability trade for me. So again, this is just still sitting in the range here. Now again, the breakout level is going to be below the fractal, so breakout traders look for the breakout of the fractal level. So your level will be down here looking at this level. This is about where you'll get into the trade. You want to get through that level, and that'll be your area to get into the trade with a stop loss probably up around this level at the you have a stop loss up here at the bottom of the cloud. That's a strong support resistance level rather, and you could even move it up higher to get right here at the fractal level, because the market is not breaking the bullish fractals, it's breaking the bearish fractals at this time. So that's what we're looking at, get above that level. If it starts to break bullish fractals, you know you're wrong, and you know price is going the other way. What could you do? You just trade and go back the other way. Now you know which way the market's going. This would have just been a pullback of a move. So you look at the overall move here, and you can see the pullback levels. We do break the bearish fractals, even though this is showing a trend upwards. We are breaking bearish fractals because we're in a pullback here. But the overall move is bullish, right? So if you move your chart in like this, and then you just see this much of the market, and you say the trend is downward, you're not looking at very much. It's only for a short time. This is a pullback of this overall move, but is this going to continue down? You have some support here based off of this trend line here, and you know your fractal level support, but the market's breaking lower fractals. And if we stay with this trend upwards, this will be around the area that the market may pull back and go back long again. So you need to wait and see. That's the breakout level right there, so you get into a trade there. Everything is, like I said, everything on here is bearish, accept your future. So you need that to change over. And that's again the same thing as the other charts, looking at the same things, and you see the same things, and you just look for your rules and you watch these fractal levels and look at your support and resistance. These are all things that are going to help you to trade, and all you need is the Ichimoku system, and follow these rules and look at these things that we're talking about every time we talk, right? So that's Euro Aussie. We're going to go to the Aussie Yen and check that out, see what's happening there. All right, so Aussie Yen 4 hour time frame. This is going to be quick because I don't even know why I'm looking at this pair. It's really not at a point where I like to mess with it or get into a trade or attempt to get into a trade. It needs to pull back a little bit for me. I don't know. Let's see how far we are from the Kijun-sen here. We're not really far, but um, it's far for me because that's the level I want to get closer to the Kijun-sen, and the market's been moving up and we want to see a pullback. We just broke this fractal level here. So let's see what happens here after you broke this fractal level. So you would have got into the market right here on the break of that fractal level with this candle close, or the break of it, which would have been right here. So you would be in this trade, but you have your stop loss way down here. If I'm going to get into the break, I want to see another fractal level that's closer. Now the next level is here, so this is pretty far away. I wouldn't even look at this pair yet to get into a trade, so we need to see this come back somewhere here. Now this did have a breakout here. Let's see how far we were. There's the breakout, and let's go 26. See, 26, this one was barely just not ready. We still one more right here. So breaking out of here, you were still far away from the Kijun-sen for me, so I probably wouldn't have taken this anyway. And it had a nice move up. You would figure we're getting out of equilibrium, so we're getting farther and farther away from the Kijun-sen, which puts us in market disequilibrium, right? We're more in market equilibrium when we're closer to this Kijun-sen, because that's the normal prices. That's the average prices of the past 26 periods. Okay, so that tells you that your oversupply, or excess supply or excess demand, based off of where this is, based off of where the Kijun-sen is. So we'd like to see this pull back closer to this level, and then we could start talking about this pair. Right now I'm not even going to look at this pair, so I don't know why I even showed you guys, right? So we're done with this. Let's move on to, we're going to look at two more pairs here. We're going to look at CAD Swiss franc, and then everybody's favorite Euro USD, which is not my favorite. I don't even mess with Euro USD, but I know everyone likes it, so I want to just check it out real quick. Okay, so let's go to CAD Swiss franc real quick. All right, so CAD Swiss franc 4 hour time frame. This is we're underneath the cloud, so basically we're still bearish, and we have this Kumo twist here, so our future is bright. But Chico span, we're inside this price realm. I just like to get outside of this. So basically we need to get above these levels, above this level or below this level, to look at a trade. Now the thing about it, depending on where we get above or below this level, this breakout below this level is not going to be a really ideal situation, because look where Chico span is and look where these prices. Chico span, this would have to range for a while, then get over here on this other side over here for it to be ideal. And the thing about this also is the breakout high, that's the level that we would look at best, because two things about the breakout high: you already have Chico span above price, will be above that price level, and you have your future, which is already bright, and price will be on the other side of the Kumo, other side of the Kumo. So everything there will be in that phase will be bullish, and you have a TK crossover, which is bullish. So everything looks bullish for the bullish move. So maybe this pullback, you're in a range here, so maybe the pullback off of the bottom of the range, we bounce from the top, go to the bottom, and now maybe we break out and break outside of the cloud. Then you will have a nice ideal trade. So if this can pull back and then move outside of the cloud, then this will be a nice Kumo breakout. It'll be all set, everything's set for you. Now if this twists and goes back the other way, then no good. But see, it's been in a kind of a range. We had this breakthrough down here and price moved up, and now we're back in that same level of range. You can see the bottom of the range here. We stayed that level once we broke and came back, and then we continued to follow that level again. So let's see if we could bounce off of this level and then get a trade long. That would be the ideal trade based off of the way the Ichimoku system is setting up. Okay, so we'll wait and see. But if we break lower, then it's not good for me to trade this, because even the break lower, yeah, we may come down to this level, but I still want to have high probability trades. So depending on where the break is, it's not going to set up our rules, because our future will probably still be bright. And you need to look at how far we are from the TK crossover. We need that to break lower. So this looks, we're in between the TK crossover levels. So we're in between the Chiku span, the Kijinsen and the Tenkan-sen. We're right in between those levels. We need price to get outside of there and decide where it wants to go. Right now it doesn't know where it wants to go. So this will be a nice looking trade if it could bounce off of this level somewhere around here and break out of the cloud to the upside. That'll be a very good trade to look at. So keep an eye on CAD Swiss franc 4 hour time frame. If it breaks lower, that's on you if you want to take a break out of the fractal level, because then you're not following the Ichimoku rules. But if you want to follow Ichimoku, your best bet is to probably look at a bounce off of this level and hopefully look for a trade to the upside if we break the cloud to the upside. That's what I'll be looking at, and we'll see what happens. So let's move on to our last one, Euro USD. All right, so Euro USD, we're looking at that right now, and you can see I have an indicator down here, and this is going to be the ultimate oscillator. I think it's very good for showing divergence, and I wanted to just see if we were at the bottom here of this move maybe. So I put this in to see if there's any divergence, because a lot of times divergence is a very strong indication of maybe the market turning around. So the market's moving downwards here. You could see divergence though takes a long time, because sometimes it doesn't happen right away. So let me show you here. Here's the low here, and then you could see what the indicator is doing. It's moving upwards. So that's divergence, because this is moving downwards all this time. Price is moving downwards. Well, here we hit a double bottom. Basically, we flattened out here. We haven't broken any fractals lower. Now, even if I didn't have the indicator on the chart, I could see we didn't break any fractals lower. We made a bunch of fractals in this area, didn't really break anything lower. So maybe price is turning around here. So you see the consolidation getting into this range area, because this is where you have a lot of people, a lot of change of sentiment with the market. Some people taking profits, some people buying here. So you have a lot of things going on here. This always happens all the time. All right, so a lot of times you'll see as price is moving down, the divergence of the also ultimate oscillator, then you can see we've stopped here. So I'm looking at that, and I can see I still have this divergence, and now finally this is moving above that 50 level here. So maybe this market may continue higher. So maybe we're done with the move here and we're going to start moving upwards. So I like to do that with the ultimate oscillator, and I'm going to remove it now. Okay, so the thing is, now we see that. So I'm going to look to see, right now price is really all over the place for me to trade anything. I want to get above this cloud before I even consider looking at this, or else break below this fractal level. We're in between levels now. We're in between this range, between this fractal levels. A breakout trade above this fractal level, that's another scenario for breakout traders. But I want to get above the cloud, then we'll see what's happening then. Ichimoku, as far as the Chiku span, will still be inside this price range. So really we want to get above this level, this fractal level, before we really start looking at this pair. Let this pair start making a real commitment to the move to the upside. Other than that, it's not making any kind of commitment. It's all over the place. So I wouldn't really mess with this pair right now. I would wait and get more stability of which direction it wants to go in before I jumped into it. Okay, so basically that's what I have for you guys this week, and we'll continue to bring things to you. Check out my site, fx@oneglance.com, and I'm going to be opening up some things on that site. I'm going to have a member page where pretty much I have a member page, but I don't really have it opened up because I have things I want to put in there and get it going. So then I'll open that up, and then I'll have membership to that page and to other things. And then I'm always going to continue doing these free videos like this and giving you all the information that I still do. And basically, guys, that's going to be it. Just check out my site, look at the blog, see what we got going on, and also register on that site, because what you'll get is you'll get emails from me, and I'll let you know that when we're having more webinars. The webinars are free, so you don't have to worry about that. So just register on the site, and then you can get emails, updates of what's happening as far as what I'm doing with the Ichimoku system, as far as webinars and other free things to that nature. Okay, so traders, that's it for now. Have a great weekend, and God bless you guys. So long.